everybody, I'm Giuseppe Basilio, also known as the FibStalker. Welcome to this weekend review. This is part one of today's review. Today is May 27, 2018, and this video is part of the FibStalker and Asian Trading Service. It's 11:08 p.m. EST time in Toronto. As usual, if it's the first time you watch this video, please pause it here and read the usual disclaimer. Past performance is not indicative of future results, and trading Forex carries a high level of risk and may not be suitable for all investors. The speaker and author is merely providing this material for your general information, so no trading recommendations, okay? All right, so let's get into the markets, and we'll start from the euro here, the euro dollar. We have seen this market moving basically lower in the last four months here. This is the last week of the month of May, and you know, those who follow me know that you know, this is not the first trades that we made in this market in 2014. I've mentioned, and 2014 and 2015, I've mentioned many times these trades here, the 139.60, which brought price into the first target. So what we're seeing now is the next measure move from highs to lows here into this area here that has the potential to push price into the 95 area. Okay, so that's very possible. Of course, if it happens, it's going to take many months. Just don't forget, you know, it might not happen like in 2014 here. This market might retrace fiercely above for days and weeks, as it happened in the past. All right, so in the open here, we are seeing a reaction higher. Let me remove these levels here. And I'm going to show you where this reaction high is coming from. It's coming from an area of potential support. You will remember that we had two highs, which actually hit first target, and then the next measure move, it's what is in play at the moment. So this measure move has the potential to move price higher, even to the point of retesting the 21.60. If the 116.05 or 6 here pierces on the downside, then the next measure move will be the full 50% from lows in 2017, beginning of 2017, and highs here at the beginning of 2018, and that would be the 114.47. Should the 111.85 be pierced, then that's when the first target of this large measure move on the monthly would be confirmed. It doesn't mean that the market is going to get there, but what it means is that smart money long would have no interest in trying to push this price higher. Okay, so when we look at the smaller time frame here, there's a very clear sequence of measure moves, which also gives us a potential for the upward retracement if this continues. As you can see here, the lows to the anchor here, the 121.84 has offered a measure move that has tested to 120.03, which brought price into the first target. Okay, and price continued lower but could not make it into the second target. As you can see here, it didn't make it into the 115.98, and therefore we are entitled to actually trace same anchor, new low here, which is a 90% retrace of the last move that could come into play. That will bring price into the 1915 area, and that could be the next area of resistance for the euro. Okay, so I think it's very clear here. We have you know, very technical market and clear on all time frames, so we know what to do if this correction continues. If it goes, the market resumes the move lower, then we could see 114.47 trade. And I'll review the SP 500 here, which has been moving laterally last week, basically gaps higher and lower, and that's what we're seeing at the moment as well. So this market has traded the 25.30, you will remember, and it is on a potential route of retesting highs. Now typically the summer it's very choppy, and Now you could see this market continue here for several weeks or not go very much higher until mid of July. Then mid of July to mid of September, I mean, there is a downward bias generally. It doesn't mean that will happen this year, but ideally, I'd like to see this market getting into the previous size before mid of July, and then maybe short retrace and then a continuation higher starting from October. Okay. I believe that there is the possibility for money to get into the US dollar, so a lot of people are calling a top in the SP 500 here, but maybe the better of this move, we have not seen it yet, especially when we go back and we study the markets. Since the 50s, we see, and before we see that, difficult market like the market of the last 18 years are followed by much easier markets where the market continues higher. Some projections see another gain of 130% in the SP 500 before seeing the final top. I'm not saying that should happen or will happen, but that's one scenario to keep in mind. All right. So with this, with the current strength in the dollar index, so let's review the dollar index here. Before we do that, let's look at what is holding this price here on the daily, and that's the highs to highs from an extension here, which we identified last week. That's what I'm going to use for the time being, and that has not only been confirmed 2 weeks ago, but also last week, and it was tested twice. 2707, it's our level. And if this levels actually pushes price higher, it's gonna happen when we see 2742, 41 here breaking on the upside, and we have these two targets, 2756 and 2782. All right. So let's look at the gold and silver. Sorry, before we do that, let's review the dollar index here. The dollar index has been very strong, of course, and opposing, of course, the move in the euro dollar. And this market has opened with a slight correction here, but we're going to see whether this is going to continue this week, or the market is going to test that 95.08 before putting on potential retrace. In here there is a logical level, which is our, you remember we mentioned the 50% long here that has not held first, and then it held here and broke price into first and second target, and well above that second target. So there's a logical level here, which is the next measure move in our sequence from highs to highs. Okay, and this is a deep retrace. If that happens, we'll need to test that level, and we'll see whether the market is going to hold that level. That would be a very deep retrace there, and could potentially put on jeopardy the trend as well. However, because of this very, very strong move higher, we also have to consider one of our pattern here, and so I'm going to project a closer level, the 93.02. If the price corrects and gets there, that's the first level we're gonna test if that happens. Okay, now mind that this market could just continue higher, just from here. Okay, remember what happened in 2014. The market never looked back, and if it does for a small reaction, which is tradable. And that's where and that's where the market can pose. When it poses here, I mean, these are good opportunity to add to longs, of course. If that's the case, we could see this market continuing higher for several weeks before they're getting a correction. And this market, it's capable of printing subsequent monthly bars here. Of course, there'll be always the retraces, which are tradable, and big opportunities to add. So we'll see if the dollar index continues higher, how it's going to continue higher. In any case, it should always offer opportunities for adding or an entry. Okay. Because the dollar index has continued higher, gold, of course, has moved lower in the last few weeks here. Now, last week, this market has pushed higher, but as you can see now, it has opened with a gap lower. We know the level needs to be retested, 1263, and that's the level that, of course, we don't know for sure is going to be retested. That's a level where, if retested, smart money will be there to see what's next, whether they want to get involved or not. So at the moment, that's what I anticipate here happening in this market. So in the meantime, in the last week, we actually have mentioned potential for a 50% here. The 50% was in play Thursday and Friday. Although Friday has closed near highs here, the market has gapped lower into 1273 and 1263. Okay, so this is what we can see here in this market. And silver has moved laterally, has been a little bit stronger, but as you can see here, it's still in this nonsense lateral move here. So here there is very little to be made. There's a lot to be lost actually. And when the market is moving like this, I mean, I suggest you just stay away, because it's not worth it. Okay, so because we reviewed the dollar index, let's review the US dollar, Singapore dollar as well. And I use this as a proxy of the dollar index, and as you can see, at the moment this market is showing some weakness here and the possibility to retrace on top of that level that we mentioned last week, and that's the next extension that has been tested and respected already. So the next test is going to be a dangerous test, and we'll see whether this is going to hold or not. I anticipate holding, but anything can happen in the market. Okay, so let's not assume always, let's not assume anything in the market. So let me review the remaining majors here for this first part. And we'll start from the New Zealand dollar, US dollar, which has traded the 50% long here, and it's still showing support on top of this level that traded like we were anticipating, with a 4+1 rule here. So because this is a range, now there is the potential for this market to trade all the way into the upper bound of the range, which is 0.7519. As you can see here on the daily, the 50% has not held on Wednesday last week, then held Thursday and Friday, and again price opened above that level, which gives us also a first target, and that first target is right into that extension short that we see here. It's already on the charts 0.7002. Okay, so that's what we see here, and there is the potential for this market to continue higher. Of course, with weakness in the US dollar, it's easier for these markets to move higher. Similar situation, it's for the Australian dollar, US dollar here, and this market also has tested the 50% long for the first time. Let's remember that. I want to remind you that back at the end of 2017, that 50% was not tested, but now it was tested, and the sequence of measure move lower here has failed. So this market has at least the possibility to trade into the 50% short here, but because this is a range, there is the possibility for this market to move much higher. So we'll see if that happens, and of course the US dollar has to collaborate here. We reviewed the euro dollar already, so let's review the pound. The pound also has been under much pressure here. There are the discussion about the Brexit. The Euroland seems to be in control of the Brexit process now. So this market has continued lower, and remember that on the monthly we identified this extension long lows to lows here. This is what has traded and kept pushing price lower for several weeks, likewise the euro, and you're seeing more weakness in here as well at the open compared to the euro. Okay, so what I've traced here, I have an extension chart in case we have a reaction here, and also in this case we have two levels. I'm going to use two levels. One is the canonical here, but I'm going to use also another pattern in case we get a much shallower retrace here, lows to lows. Okay, that would be the 135.23. If the market rallies into the level, that could be the level to test for a continuation lower. US dollar, Swiss franc, Canadian, and Japanese yen. They had, starting from the Swiss franc here, this market had, it's actually experiencing a correction here. We need to see whether this is a correction before a continuation higher. That happened around the previous levels here, but we need to look at the sequence of measure move. The last 50% was lows to highs here, so what you see here, the 98.51, it's what I've traced basically 3 weeks ago. Nothing has changed here. This level is the level that is going to be tested by program trading and algos if price gets there, and we will see whether that will produce a continuation higher for this market. Below 98.03, well, this market could actually come and test the weekly extension and then potentially the bottom of this range, but that would happen, I believe, only if the current rally in the euro, in the dollar, is not real. Okay, and this correction has been very mild here, so you know, it's kind of market has not sold off very quickly, but it has been very gradual here, like a flag, and therefore the possibility for a continuation higher is there. US dollar, Canadian dollar. This market is, of course, pushed higher by the strength in the US. It's basically now respecting, as we mentioned in the previous weeks, it has been respecting the 50% long here, and that's what we see at the moment. Okay, the market has last week had a bit deeper retrace here, retracement, but then continued that, and it's now it has now opened higher as well. Okay, and remember that this market is now challenging the 50% in the 50% chart here. This level was defended, the 61% level was defended. If this continue higher, we are going to see, likely going to see that level being pierced, and if that happens, then the next level that algos will show up is going to be much higher, into the 135.67. All right, and the US dollar Japanese yen is the last market of this first part, and in here we have we had this you know, retrace into the next extension long in this market, and that's a weekly extension long, so it's from the level here, from this level here to highs. Okay, and that is in play at the moment. It has been tested on Thursday, on Friday, and let's see if this holds and keeps pushing this price higher. This market is in a lateral correction here on top of a 50% on top of this 50% long, so it could continue within this area, and that's the definition of sideways move when bull and bears are not committed, and therefore they do not actually support the measure moves. Okay, That's what we're seeing at the moment. So we could see this market continuing lower into the bottom of this sideways move here before it decides continuation higher. So that could actually correspond to a correction in the dollar index as well. This is it for the first part. Thanks for joining and watching this video, and I'll see you in the room. Bye bye now.